Hello, folks. This is Howard Reitzel from Reitzel and Company with our March 2015 financial update. In this month's video, we'll talk about some of the major economic events that occurred last month and give you some insight into what they might mean for you as an investor. Please read the required disclosure statement at the end. The Federal Reserve and interest rates dominated economic headlines last month. To support the economy, the Fed has kept interest rates at historically low levels since 2008. Since bond buying operations ended last October, the next step will be to start slowly raising interest rates to quote unquote normal levels to prevent inflation from getting out of hand. After March Open Market Committee meeting, Fed Chair Janet Yellen announced that the Fed is moving away from a patient interest rate policy and will start thinking about raising rates this year. Though we don't have a date yet, most analysts think that the rate hikes could come as early as mid-June. Though investors are getting nervous about higher interest rates, we know that the Fed will move carefully to avoid damaging the economy. Speaking of the economy, we also got to look at the final fourth quarter gross domestic product, which showed that the economy cooled in the last 3 months of 2014, giving us a 2.2% growth. This brings overall 2014 economic growth to 2.4%, up from 2.2% in 2013. Investors care about GDP because it's our most comprehensive economic scorecard and shows us at a glance how the economy is doing. Though the relationship isn't simple, healthy economic growth generally translates into strong corporate profits. All else being equal, strong profits usually boost markets. Digging deeper into the data, we see that strong consumer spending, exports, and business investments supported the economy. The growth rate decreases because of higher imports and lower federal government spending. To translate all of this into plain English for you, the economy has fundamentally on a very stable footing at the end of the year. Though we don't have first quarter GDP numbers yet, clearly the Fed feels comfortable enough about the economy to think about taking away the training wheels. Looking ahead at the first quarter, as the first quarter ends, investors will turn their attention to corporate earnings reports to find out how U.S. companies performed. Right now, overall expectations are lower because of weak overseas demand, low oil prices, and the cold winter. Since leadership teams like to understand or underpromise and overdeliver, we can hope for some positive earning surprises. We'll know more in the coming weeks. That's it for the March Educational Economic Update. As always, if you have any questions, concerns about what we've discussed, please give our office a call at the number below. Here are some upcoming events that we'd like you to know about. We have an open house April the 24th, 2015, Friday, from 4 to 6 p.m. at our new office, 400 West 7th Street, Suite 101 in Bloomington, Indiana. And we'd love to have you and a guest. Once again, this is Howard Reitzel with Reitzel and Company, signing off for the month of March 2015 with the financial update. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 812-500-0263. Have a great day.